This is All India Radio Mangalore. Dear listeners, in today's Talk in English program now, Mr. Manoj Louis will speak on the topic the role of investment and savings in a youngster's life.
A beautiful quote from Bill Gates goes like this: If you're born in a poor family, it is not a crime. But if you die poor, that is the biggest crime you do for yourself. It is such a powerful statement for all concerned, as it defines or underlines the opportunities that the investment world has to offer to an individual. Let's understand the concept of investment in another perspective. If you're sitting under the shade of a tree, it is because someone planted it many years back. This quote of Warren Buffett speaks about the time you need to give for your investments to grow and multiply. Investment is nothing but planting a sapling or sowing a seed, watering it, and providing manure as it grows little by little. It may take some time for the seed to grow into a plant and into a mighty tree. So also is investment. Allow it to grow. The biggest dilemma an income-earning person has to go through is whether to save first or to invest first, where spending is a compulsory variable. Savings is setting aside money you don't need now, or rather you keep it for emergencies or for a future purchase. Investing is buying assets such as stocks, bonds, mutual funds, or real estate with the expectation that your investment will make money for you. So at the end of the day, the chronology should be invest, save, and spend. It is said, do not save what is left after spending, but spend what is left after saving. Save to invest. Don't save to save. The only reason to save money is to invest it. Investing is very, very important because we believe that investing would be means to use our money to make more money. If we don't invest, we are missing out on opportunities to increase our financial worth. There are great chances that we may lose our money in investments. But if we invest wisely, the potential to gain money is higher than if we never invest. The importance of investment can be underlined with this beautiful quote of Warren Buffett. When you're fast asleep, your money should earn money for you. If not, you will have to get up and start working very hard. For those who rely on a single source of income, he says, you are very closer to poverty. During this pandemic time, where the salaried class or daily wage earners were significantly affected by stoppage in financial flow or reduction in salary, a realization dawned upon them. I wish I had invested. Today, if we analyze, we find the number of investors, young and old, who have opened Demat account for equity investments, and those who have opted for any mutual fund investments have grown exponentially when compared to pre-pandemic times. People have realized the importance of creating a second source, a parallel source of income. Some basic pointers to all our listeners. Keep your investment simple. Don't invest in something that you don't understand. If an investment avenue excites you, don't invest. You heard it right, don't invest. Do basic research on all types of investments and choose a few that you believe that suits you. There is no harm to go through a certified financial planner, for he or she would guide you in right investments for a negligible fee. Do your basic profiling and analyze your risk appetite. Diversification. Allocation or breaking up your investments into a quality portfolio is a must for averaging out the risk. Discipline and regularity are two principles every investor must follow, and if done, definitely you will see your investments grow. Keep a check on inflation, for it is a camouflaged or an invisible enemy for every investor. Look at your investments and see that it earns inflation-beating returns. Real rate of return is what every investor needs to analyze from the point of view of earnings. Real rate of returns is nothing but the return earned after adjusting personal taxes, if any, and inflation. Start investing early in life and allow or give time for it to grow. People ask questions. Where should I invest? When should I invest? My simple answer to the above questions is just another question. Why are you investing? You understand your financial goal or your purpose of investment, you automatically get answers for when and where to invest. Investment without a financial goal is meaningless and is on par with undertaking a journey without destination. In this presentation, you may wonder as to where is savings gone when the topic is both investment and savings. Savings is nothing but excess of income over expenditure, and importantly, savings needs to be invested for generating income, creation of asset, creation of wealth. Is it good to keep money in the bank? Should we keep a large amount of money in the bank? Is the question everyone is asking. My answer to it is a clear no. You can keep an emergency fund, say up to rupees 50,000 in the bank, and for further liquidity can deposit the rest in money market instruments like debt fund or ultra short or short term funds. Actually, by keeping a huge sum of money in the bank, you are losing out on earning an income and at the same time receiving negative income because of the application of time value of money. Insurance is not an investment. It is only a social security measure. On the demise of the breadwinner, the family lifestyle should not suffer, and therefore you need insurance. Actually, an individual needs 5 kinds of insurance. First, life insurance. In that, I would like to talk about term insurance. For a minimum premium, the insured will be covered for higher sum assured. For example, a person of 20 years age, the annual premium under term insurance would work out to be rupees 5,800 and the coverage would be for rupees 35 lakhs. But term insurance is just like a motor insurance, as the insured will be compensated only when the event happens. Second, medical insurance. Every family should be covered with good medical insurance coverage. Hospitalization is a very costly affair in the present time, so better guard against it. Third, property insurance. Protecting your property against all odds is a must during the present time, especially if there is a home loan on it. Fourth, accidental coverage. And fifth, coverage for the hospitalization period. Salary cover if not received due to missing out on office. So these are the 5 kinds of insurance every person has to have, and there will be enough freedom for a person to make his or her choices. When do we start planning for retirement? The day you start earning is the day you start planning for your retirement. You may have to contribute in drops if you start planning for your retirement early. If you plan for retirement at the time where you are close to your retirement age, then nothing much can be created for your post-retirement period. India is a gold-crazy country. My recommendation would be to invest minimal in physical gold and maximum in gold sovereign bonds and exchange-traded funds. Reason is simple. Though you may think gold as a good friend during difficult times, but it would not fetch the amount you paid to buy that ornament. Also, gold doesn't give you any income. Investing in mutual funds is always welcome because of the benefit it offers to the investors. Mutual funds are basically for those who have money but don't have time to track the stock market. Any common man can invest in mutual fund, and the investment is as low as rupees 500 per month in a systematic investment plan. Start early, maintain consistency in investment, and stay invested for a long time, not less than 5 years. The benefit is there to reap. Investments in direct equities. If you can keep track of what's happening in stock market, then direct equities are there to take. But I would always suggest to reach out to a good financial planner who will take good care of your money instead of you exposing your life savings in direct equities. But as the saying goes, buy right and hold tight. Buy the right company stocks, companies whose fundamentals are strong, and stay invested for a long time. Definite positive returns are guaranteed. For investment in direct equities, you need three basic things: a bank account with internet banking facility, trading account to buy or sell securities, and a demat account, an account to hold shares electronically. Trading account and demat account can be opened with any SEBI registered depository participant. As the presentation topic was savings and investments for youngsters, as I come to the close of my talk, I would like to give a message to all our young people. Call them millennials, Generation Z, or Generation Alpha. Don't be a spender on unnecessary and temporary pleasure moments and unwanted gadgets. Don't get into consumerism, cause if you do, as Warren Buffett very rightly says, if you buy things you do not need, then you'll have to sell things that you need. Be vigilant, focus on investment, park your funds in the right avenues, and be clear of your financial goals. Become financially independent and a prudent investor and make the right decisions for your life.
Dear listeners, you have just heard Mr. Manoj Louis speaking on the topic, the role of investment and savings in a youngster's life. This talk came to you from the studios of All India Radio Mangalore.